Good afternoon, traders, and welcome to the In the Zone Daily ACD Recap for Tuesday, May 31st, 2016. In these recap videos, I go over the best ACD setups that occurred on this day. These videos are intended to show you the types of trades the ACD method offers on a daily basis. Let's take a look at what happened today. Now, first, I want to apologize for any kind of sniffling that you might hear. I'm dealing with a little bit of a summer cold here. I've got a little bit of a runny nose, and I apologize for any kind of sniffles that I might have. So I'm going to apologize ahead of time. All right, so today I'm going to talk about plus days and minus days, and I'm also going to talk about A downs through the pivot. Okay. Now, today, going into today, first let me talk about plus days and minus days. Okay. Today, going into the day, we had on my trade planner 30 days ago, and that's 30 trading days ago. Okay, not 30 actual days, but 30 trading days ago, we had a plus day. Okay, so I know 30 days into the future, which is today, that we have the potential to have a plus day today. Now, in order for that to happen, you have to have things line up properly. Well, in order to have a plus day, the opening range must be below the pivot range. And then price must make it through the opening range and then make it all the way through the pivot range and close on the upper side of the pivot range, and that's a plus day. Now, when we opened up this morning, we were gapping above our pivot range, so I knew the plus day was immediately off the table. But there's something that I know about plus days and minus days after years of trading this method, and you won't find this in Fisher's book, and you won't find it in any video or webinar that he's done. It's just a observation that I have made over the years of trading this, that sometimes when you're expecting a plus day, you get the opposite. You'll get a minus day. And sometimes when you're expecting a minus day, you'll get the opposite. You'll get a plus day. The key to understand this is that something significant happened 30 days ago, and something significant could happen today. Okay, and so you have to ask yourself, okay, is the plus day lining up? No. Okay, now you also have to keep in the back of your mind that a minus day could happen. Okay, if the conditions set up properly. Well, today we had those conditions set up properly. However, by the end of the day, we couldn't quite get the minus day because we closed back into the pivot range. We needed to close below the pivot range, and we didn't. But we still got the same reaction that you could have traded it. Okay, so that's the plus days and minus days. Also, one other thing I want to talk to you about plus days and minus days. They usually come in pairs. Okay, and they usually come back to back. All right, so it would not surprise me at all if tomorrow, today, let me take that back, because today we did not close below the pivot range, so today was not a minus day. So tomorrow doesn't necessarily have to be a plus day or a minus day. But what I'm trying to say is that with plus days and minus days, realize that nothing is set in stone, but you just have to watch the situation that unfolds and realize that you can get the opposite of that expectation. And also, if you do get a plus day or a minus day, the next day watch for a reversal. Okay, and I've seen this happen a lot. One day you'll get a plus day, and the very next day you get a minus day. Okay, and so I just wanted to make you aware of that. All right, so that's the plus day and the minus day. Now, today we had an A down, and it was through the pivot, and I'm going to explain why it was through the pivot. Okay, and so let me bring up first. Let me show you. Here is my trade planner, and you can see right here that the plus day was for today of May 31st. Okay, our next expected plus or minus day is going to be June 17th, and we're going to be expecting a minus day on that day. Okay, so that is that. All right, now, today, when we could not, well, here's our opening range. It's a very tight opening range. And the first hour, the initial balance was also tight, okay? And when they could not take out the high of the initial balance here, okay, we couldn't get range extension to the upside, and this big bar rolls over, now I start to think, we took out the low of the initial balance, and I'm like, okay, range extension to the downside. I've got a pivot range here that's supposed to be support, and I've got an A down number that's right in the middle of it, and that should be support too. So you've got all these things going on. It's like, okay, I can buy against this pivot range, and if you'd have done that, if you'd have bought here at 96 and a quarter, you got a nice little bounce back up to the bottom of the opening range, but it couldn't get back into the opening range. That's your first clue that, hey, when this thing rolled over from this nice hammer, this is a nice hammer, this is telling you something. And when it couldn't get back into the opening range, hey, maybe this pivot range, maybe they want to go visit the A down, and maybe the range extension is going to be to the downside, okay? So as price comes down here to the A down, of course, I like to fade, just about every A. Now today I knew this was not going to be a good A to fade, and that's because of the plus day, minus day thing, okay? So we had a expectation for a plus day. However, we've got an opening range that's above our pivot range. We've broken the initial balance. We're headed down for range extension. If we confirm this A down, then we could, get through the bottom of the pivot range. And now we've got an A down through the pivot range, which is a very powerful signal to the downside. Okay. Also, today was the last day of the month. Okay. So that was another volatility factor. Okay. So let me bring up and let me show you how fading the A, even the scary ones, okay, tends to be a low risk trade. Okay, I'm going to bring up a 1 minute chart. All right, bring up the 1 minute chart here, and we're going to take a look at how this, transpired. Okay, so we have a big 1 minute bar here that comes down and tags the A down number. Now, if you'd have gotten long here, trying to fade it, okay, your risk initially is going to be 11 ticks, which is down here at 91.75, okay. Price pushes down, but it can't make it down to the 11 tick stop, but then it spins. Now, you can count this bar if you want, or you can just start here and go 1, 2, 3, 4, 5. So right in here, you got 5 bars, 5 minutes below the A down, and that tells you that the A down has been confirmed, and you want to get out. Now, right here, this low of 92.75 pierced the bottom of the pivot range, which was 93.63, or you could say 93.50, if you will. So during this bar, the pivot range failed, but it couldn't fail on a closing bar, but it did fail. And then you get 5 minutes here, so you got to confirm, you get out of your long if you would have faded here, okay? And so this bar closes at 93.50. Well, you got long at 94.50. That's 1 point, okay? That's a small risk to take for fading the A. Now, I did not take this fade because, again, I was expecting, hey, we could have a minus day today. We could have an A down through the pivot. And so this is where, when this happens, if you are fading the A, you get out, and you're wrong, and you lose 1 point per contract, okay? Done. Now, if you remember, I always tell you, don't sell in the hole, okay? And so you'd want to wait for a bounce. Well, the bounce that we got wasn't that nice of a bounce, although it came back to 95.50. And let me take this down here. So in here, you've got 95.50 is the best that you can get. Now, a little clue, okay, to help you out. If you have, okay, this bar here pierced the bottom of the pivot range, and then you confirmed the A down. That is an A down through the pivot range because you have violated the bottom of the pivot range. Even though you're not through it yet, on a closing basis, it has failed, okay? So if that's the case, where's your stop? Your stop can be the top of the pivot range. Remember, Fisher says that when you have an A down through the pivot, you can you want to step on the gas, increase your size, and reduce your risk. And you reduce your risk by moving your stop to the top of the pivot range. Okay, so the high here of the pivot range is your stop, and that's why we didn't get that big of a bounce. Okay, so you would have needed to get short somewhere in here. Okay, but look at this. This is still a very small risk right here trade. Okay, to get short, and if it gets above the pivot range, you're wrong and you're out, and it's a small loss. Okay, but it's got a huge reward. Okay, big reward here. So when this bar here gets through and closes below the pivot range, you definitely know you've got something big going on right here. Okay, and so now this is the time that you want to hold on and start looking for targets to the downside. Okay, now if you didn't get on through any of this, okay, and you're puzzled and you're waiting, right here is your next opportunity to get on board. Again, you're going to realize that you got an A down, you've through the pivot, you got to bounce back, you're going to short here. Where's your stop? Top of the pivot range. Again, small risk trade here, big reward. Okay, and so this rolls over and it comes down here. Now, this afternoon, we got a little bit, crazy. I was seeing that the 86 level I knew was a key level, but I was also looking at the 84.50 level, and I thought we could possibly go to 84.50. But you can see here that they took out this low by a couple of ticks and then reversed it up and went hard. And everybody that was short here, had to cover, and they just put the squeeze on the shorts, and this thing just rallied up, back up into the pivot range. And at the cash close, we had a big sell-off that got all the way back down here, and I thought we were going to close below the pivot range and have a minus day, but we didn't. We closed back into the pivot range, so that technically eliminates the minus day. But anyway, it pretty much acted like a minus day today, and it offered many opportunities to get on board the short with small risk. Okay, guys, that's going to do it for today. It's a long video today, but there was a lot that I wanted to cover. Remember that tomorrow is the first trading day of the month, and that sets up the opening range for June. And you'll want to do a calculation off of the high, low, and close of tomorrow to give you the pivot range and an expectation for June. Okay. All right. That's going to do it, and we'll talk to you later.